Uh, Market's about to open up. Well, I'm sorry, not market open up, but we're about to start in about 3 minutes, folks. 3 minutes. 3 minutes to start. 2 minutes. 2 minutes to start, folks. 2 minutes. 2 minutes to start. One minute to start. 1 minute to start, folks. 1 minute to start. Okay, we got everybody here online. All right, folks, it is 3 a.m. and that is the start of our trading day. I want to welcome everyone back for another episode of the Forex Tech Magazine trading channel. We're streaming to you live on 3 platforms: Twitch, YouTube, and Mixer. So I want to welcome everyone who's tuning into those different platforms. First of all, I want to go ahead and get this disclaimer out of the way. Even though we're licensed to be a financial advisor, this show is not, the purpose of the show is not to give financial advice. The purpose of this show is to entertain and educate. That's it, right? We believe that an educated trader is a happy trader, more prosperous trader, and so we want to give you that education to help you trade better. We want to also entertain you a little bit because we know that trading sometimes can be a little tedious. Sometimes we can take ourselves a little too serious, and so what we want to do is kind of help relax that mood a little bit, so that way you can enjoy yourself and enjoy your trades. If you are looking for financial advice for yourself, your family, your business, your loved one, whoever, our advice to you, our best advice to you would be to go out and seek the advice or the counsel of a licensed, competent advisor, so that way they can take in your whole financial situation and build you a portfolio and make recommendations for you based off of your individual specific needs. All right. So anyway, with that out of the way, I want to go ahead and get started. Right. I think that what we're going to start off again today with is what went right, what went wrong from our trades from the previous day. Yesterday, what we did is we traded on the Great Britain pound. It was part of the strategy, but we took the Great Britain pound against the Japanese yen, Great Britain pound against the US dollar, and the Great Britain pound against the Canadian dollar. I think when we started out initially it was plus 63 for the week. That number has changed, unfortunately, so you can tell by the tone of my voice it's not going to be the best of news, but that's okay because you know what? Because we were able to use our risk management strategies that we had in place. It's not as bad as it could be. It's not where we want to be, but it's not as bad as it could be, right? So we're going to talk about it. We're going to look at each one of these trades, and then we're going to talk about what went right, what went wrong, and how we can improve going forward. Because remember, that's what the whole purpose of this is, right? That's why we trade in a demo account. That's why we trade in strategy, right? Because we trade one strategy only, not going out here doing a whole bunch of multiple strategies. We want to be able to get it right on a consistent basis with one strategy for you, right? Before we move on to something else. But even more than that, what we want to do is we want to stick with the basics. We want to make sure that the basics work, right? I'm a strong believer in the fundamentals, and I think that if you master the fundamentals, all the rest of the stuff just falls into place. A good thing about understanding the basics and why and how currency pairs move and how the market works is that, even if you went and you say, hey, I want to look at somebody else's strategies and techniques to see how they trade, if you have a basic understanding of the fundamentals of how the market and everything works, you'll be able to go in and look at how somebody else is trading, and whether or not they're giving you all the information about how they trade. For the most part, you can go in and kind of reverse engineer what they're doing and have a perfect understanding or near perfect understanding of what it is that they're doing for their strategy, and whether that strategy is bullshit or whether it's actually real shit, right? And that's what you want to do. You want to separate the bullshit from the real shit, so that way you can get paid shit, right? Excuse my French, but it is what it is, right? We're in the business trying to make money, and so what we want to do is look at the different ways that we're able to make the money, right? And we want to make sure that if it's a legit way or somebody's just trying to scam us, okay? So let's look at this here. And once again, my lines are kind of marked out on here. You'll see the take profit in green, the entry in black, and stop loss should always be in red. Let me try to put another stop loss up here. For whatever reason, it's not showing up. Yeah, looks like it's already here for me somewhere. There we go. Hope you folks were able to make some money yesterday. Hope you guys are going to be able to make some money today. Man, is this week over with already? Is the week over yet? Of course not. All right, perfect. So now let's find our 3 a.m. candlestick, because that's what we trade off of. All right, and here I had it potentially pulling back up to resistance. All right. Hold on one second, let me check something. 30.08. Oh, okay. Whew. I was like, what in the world happened? Right, here we go, we're over here. All right, perfect. Now this makes more sense. I'm like, how in the world? Okay, so here we go. Yeah. So we had it that 3 a.m. So down into the down candle. Had it that market was going to continue, because you see this is a low, high, low, potentially high. That market would go back, retest, go through that high, and continue the pattern to go up into hit the take profit, which is up here around the resistance. All right. Unfortunately, it didn't happen like that. So initially, what happened, right? after the 3 a.m. candlestick, the 4 a.m. candlestick did make another high, right? Went all the way up, right? And unfortunately, it negated this high here. Because if you know what a high is you got two candlesticks on the left, two candlesticks on the right. They're actually lower than the one that's in the middle, right? So when this one right here was the the 3 o'clock one was lower than the 2 o'clock one, but in order for this to be the 2 o'clock one to essentially be the high, that would mean that the 4 o'clock one would have to be lower than the 2 o'clock as well, but it didn't. It negated that, went higher than that, so this was no longer a low, right? And this 2 o'clock, this 4 o'clock candle actually became a high because the two candles to the right, or two candles to the left, two candles to the right are actually lower than that particular candle, right? But anyway, it went up, and then it hit the entry order, and then on the next candlestick it proceeded to go down, and then by the 6 o'clock time it had already crossed over our stop loss, taking us out of the market, right? Which is fine because we had a stop loss at right at the close of the 3 o'clock candle, so it's not like we took a big hit. It took like a little small loss. And once again, it goes back to what I was saying before, is that you want to control your losses. It's really the only thing that you can control. You can come in and you can have the best estimate, the best idea of where the market's going to move, have the best strategy, but there's just no guarantee. And as you can kind of see here, I mean, the market was definitely making, it was like probably now hindsight looked like it was a pullback, right? Just taking a little breather because it's already in a downturn. But at any rate, did not continue it, did not go up to the take profit. It just continued the downward momentum move that it had initially, and that brings us to where we're at today. All right, so we took a small loss. Once again, it happens. Take your losses though, like a man or like a woman. Get in, get out, so that way you don't blow your account up. The good thing about it is that we're able to go back and trade another day. Right, and we're going to come back in later and probably revisit this trade. This might be one of the trades that we actually wind up trading again today, just because I'm looking at it now, and I'm thinking that, hey, you know what? I see something here now that I didn't see originally. I didn't identify during the first trade, and it gives me reason to believe to kind of come back in here and to make this trade again. But now there are different assumptions. Okay, and remember, your trading techniques or whatever. You can always adjust if you feel like you're doing something wrong. Don't adjust because you feel like you're about to miss out on a price and you just want to pull your stop down and your stop loss down and try to get in. You know, try to keep the price in play, or the principal pair in play. That's a bad idea. The good idea is to go back, reevaluate how you trade it. You know, every day, whether you win, whether you lose, keep a journal of it. Write down what went right, what went wrong. Right, and by you doing that, you'll be able to refine your trading, right, and actually fine tune it and get it to the point where, okay, you're making money now. That's how trading is done. It's not just coming in and just like you see on these other sites where people are just full of adrenaline and they're coming in and they're trading, they hurry up trading, and they're just in and out, in and out, in and out. That's gambling, and that's taking a lot of risk, taking a lot of unnecessary risks that you don't have to take. And a lot of times people are not even paying attention to their lot sizes of what they're trying, for what they're trying to accomplish. And then, they win some, win some, win some, and then they have one bad trade that goes against them and just blow their account up. Okay? And that's not what we want to do. We want to be smart, savvy traders, because we are smart and savvy traders. And the one good thing about it, what you've been able to see, is that no matter, if I win or lose, I know that if I lose, I'm going to be able to come back. And I know that because I use the correct money management techniques, that even though when I do win and I lose, that I'm usually only a win or two away from being back in the profit, which is what you want to do. What you want to do. You want to be able to lose a lot and then get one good trade and then you're back profitable again. That's how the game is played. To be able to stay in it for the long term, not just short term. Okay? So let's look at the next pair. I don't think we got any questions. Let me check something real quick. I don't believe we have any questions about that, do we? Hey Tommy Bars, hope you're doing well today. guys don't mind me, I'm just doing some housekeeping, checking some stuff. All right, so let's get back into this. What was the next trade we did? Oh yeah, the next trade we did was the Great Britain pound and Japanese yen. I know I'm a glutton for punishment. I keep getting back into this Japanese yen and Swiss franc and keep taking it on the chin. All right, so let's look at this one. Once again, green bars represent take profit, black bars represent entry, and red bars represent stop loss. Okay, so we're looking for the 3 a.m. bar. Boom. So once again, that situation here where it looks like price was going to be in a somewhat of an uptrend, right? Low, high, higher low, higher, well, you could say higher high here, higher low, higher high, right? And even still, higher low, right? We'll get to this in a minute. This is gonna definitely play an effect on what we do next, as far as whether we enter this tonight and where we enter at tonight if we do this. But let's look at this. So 3 a.m. Bam, right here, right here. Definitely looks like, okay, we may have a continuation, right? We're in the middle of the price move here. All right, and sure enough, price went through, hit our entry. All right, but remember when we put our stop loss, we put our stop loss right at the end, or at the close, or at the closing wick of our 3 a.m. candle. And so what happened was price went up. Fortunately, price pulled back because it has to take a breather, like price always does at some point. And in the course of it taking that breather, it pulled right through our stop loss and then proceeded to make its way up. Did not hit our target, but it came pretty close. So when you look at the situation like this right here, you say, well, what could you do? You know, what went right, what went wrong? I think what went right is definitely, you know, identifying the right movement for price. I think even the last one we did too, but it just didn't, you know, continue or whatever. We definitely got the right idea as far as the movement for price. This one right here is not really much you can do, to be honest with you, other than, you know, adjusting your initial stop loss, which I don't necessarily recommend. And that's why I say, you know, you take a little small losses here and there. This strategy is not 100%, like no strategy is 100%. This strategy, like every other strategy that you're going to trade, is basically only going to be successful as well as you can manage your losses. That's it. And it's kind of the point that I'm trying to get across here with this, is that, you know, you see all these things hyped up, you know, online about, you know, this strategy, that strategy, this EA, that EA, signals, whatever, and it's not 100%. You know, I don't care how good the person is, I don't care how great they are, how good their track record has been or whatever. Nothing is 100%. The only thing you can control is how much you're willing to lose. And that's what we want to focus in on. Make sure that we understand how to control those losses, so that way if you have a string of losses in a row, it's not going to wipe you out, but you still be able to stay in the game. And that's what you want to do, right? And you can also still make a good return by not having to take a lot of risks, right? You know, people want to make, you know, 10,000, 20,000 a day or whatever, or a ridiculous amount of number that is, or even 5,000, 6,000 a day. That's great to make 5,000, 6,000 a day, but the reality is, if you can duplicate what your salary is a day, you know, would that be important to you? You know, maybe you're getting, you know, $10 an hour, you're working 8 hours a day. I mean, $80 a day. Would that be good for you, right? Plus the 80 that you're gonna, you know, make when you get to the job and work your 8 hours or your 10 hours. I mean, your 8 hours or whatever, right? Yeah, that's the question. Yeah, because now all of a sudden you went from, you know, making just, you know, $80 a day to making $160 a day, because you got 80 from Forex and 80 from where you work, right? And then over time, what you would like to do is just be able to get, the 160 a day strictly from the forex. Yeah. So you're making 2 times your salary, but you don't have to go on to work. You don't have to spend all those hours at work. That's a good thing, right? And then over time you build that up until you get to $200 or $300 a day. I don't know anybody to be mad that would make at least $500 a day. That's not a bad day, right? You don't have to make $3,000 or $4,000 a day for you to be good or successful at forex. It's all about taking your time, learning the basics, developing consistency in your trading, right? So that way, you're a better trader overall. Okay. Hold on 1 second. Let's check one more thing. I'm sorry, I know you guys can't see this, but I'm checking some of my other streams and just seeing if folks got questions. Let's see if I can clean some stuff up here. Let's see here. All right. Here. All right, so yeah, let me get back to it. So anyway, let's look at this one again. So yeah, sometimes you gotta take a loss. Take the loss, be done with it, man. Take the loss, get in, get out, take your loss. Who cares, right? Once again, this is a demo account, right? And that's the reason why we're doing this, because we want to talk about losses, want to show some losses, but we also want to develop that consistency so that way when we start trading the real account, which is probably in about another 2 weeks or so, right? We want to eliminate losses as much as possible. And then we also want to make sure that we minimize them as much as possible as well. So that way when we're trading, hey, we're making money, okay? So this right here, it is what it is. You're going to have to take that loss on that one. No real way to salvage that one with the trade. If you would have went in and you would have tried to lower your stop loss, right? Let's say, for instance, if we would have went in and we say, okay, you know what? The market's turning against me. It's still early. I think this thing has an opportunity to play out. So I'm going to lower my stop loss all the way back down, to here, which is probably the bottom or close to a bottom for this particular pair at the moment. You could hurt yourself, right? Because you all of a sudden went from maybe taking like maybe 10 or 15 or maybe 20 pip, loss, to now all of a sudden putting yourself on the hook for 63. So you went from taking a $25, $20 to $50 loss with a standard lot to taking a $630 loss with a standard lot. And that's how people blow up their accounts really quick, right? Taking bigger losses than what they have to. Not that it did it, right? But the problem is, if you get in the habit of not following the rules, you get in the habit of not investing or not trading with your rules and adjusting your rules on the fly. If you get in the habit of doing that, then you do it all the time. Then what's going to happen? You're not going to be a disciplined investor, and then you're going to start seeing that your account, you're going to make some money here and there, but what you're going to start seeing overall over time, your account is just not going to do well, and then eventually your account will blow up because you're just going to take a bigger loss than what you should, and it's going to be harder to come back. That's the biggest thing. It's not how much you make, it's how much you're able to keep of what you make. And if you are taking on bigger risk than what you should, you're not going to be able to keep what you make very long. It's going to go away. Trust me, it always does. Let's see. So the next one we're going to look at, like I said, that one right there, I don't know if you guys got any questions about it, but that right there is pretty much a wash. It is what it is. Some of them you're just going to have to just accept the fact that, it didn't work out. You're going to take a loss on it and move on, all right? Build the trade again another day, all right? That's the other thing, too. When you're doing this, you want to make sure that you're able to get back into the market later, right? You never want to revenge trade. You never want to get out and then within 30 seconds of you getting out, you jump back in again, maybe try to trade in a different direction or trade in that same direction because you feel like you're going to miss out. If you feel like you're going to miss out, just stay out of the market, man. Just stay out of the market. And the reason being is because you're just gonna kill your account. right? Because now you're trading with emotions. The worst thing you could ever do for yourself and for your money is put emotions in it, right? Don't do it, right? Just keep logic. Let logic rule the day. Go in, have a plan when you trade, and trade the plan. And if it doesn't work out, who cares, right? Because if you traded the plan like you're supposed to, right, you're gonna take losses, right? But hopefully, when you put your plan together, you've already factored that in, and you're minimizing those losses. Too many times, people get caught up with that whole greed because everybody wants to live that, that big baller lifestyle. I got all this money, blah blah blah, and I did it in a short period of time, and forget about that. Don't try to keep up with the Joneses. Don't go that route. Forget about that. When you trade, you should be trading from a position and saying like, man, how do I keep my money? How do I not give my money back to the broker? How do I not give my money back to the Forex, right? How do I get more of their money? How do I put more of their money in my pocket? All right. And the only way to do that is to control the things that you can control, and the stuff that you can't control, don't mess with it. And you cannot control where the price is going to go. You can have a good guess, you have a good estimate, but you can't control it. The only thing you can control is what you're willing to lose and what you're willing to risk for every trade that you make. And that's what you need to be. That's where your focus and your energy needs to be at. That's where you need to understand proper money management, okay? So let's look at this trade. This is the Great Britain pound, Canadian dollar, right? And there's been a lot of news about the Canadian dollar the last couple of days. And there's going to be even more coming up by Friday, right? Some big fundamental news coming out. And even though I know, when we walk through our trades, we're looking at technical analysis of the trade. Do not underestimate the need to have at least knowing the economic data is coming out for a currency pair that you're trading, right? And the reason why I say this is because you can very much get whipsawed by the market. You got to remember the fundamental information. It goes hand in hand with the technical trading, right? The charts, the price action, the candlesticks that you see on the charts, all those are just physical manifestations of buyers and sellers' decisions based off of fundamental information that's been released into the market, right? That's all it is, right? Candlesticks are all this is supply and demand, right? Either you got people that's demanding a currency pairs, which is going to be your buyers, or you got people that's selling the currency pairs, which is going to be your suppliers, right? Supply and demand is basic stuff, folks. Don't make it more than what it has to be, okay? And what gets, supply and demand really going, the buyers and sellers really going in the market, is when fundamental announcements about those currency pairs come out, right? Because if some really good news come out about the currency pairs, then you're going to get a lot of demand for that currency pair, which that means the buyer is going to come into the market and push it up. If you get some really bad news about that currency pair, right, then that means a lot of sellers are going to come into the market. Now there's going to be a lot of supply of that currency pair in the market, and it's going to push it down, right? So whether or not you want to sit there and take the time to kind of go through and read each report and try to make your own, analysis and expectations of what the release is going to be, for the following day or the following week or whatever, that's up to you, right? I just say be aware of what's coming out and how important it is to that currency pair, because it's definitely going to impact that currency pair, and it's definitely going to impact your trading. If you was with us last Friday, you would have noticed that we talked about it, how the trade we put on that Thursday, the day before, got impacted by the news that was being released on that Friday morning. And unfortunately, because of that, one of our pairs didn't hit, the other ones did, but one of them, didn't. And had we just, went in and made some basic adjustments, which you should when you're trading around a news cycle, which is make some adjustments. At that time, when you do put in your initial stop loss, you don't put it in as tight as you normally would. You would give it a little bit of room, because what's going to happen typically around a news cycle, you're going to get spikes because the news is going to come out, or the anticipation of what's going to happen when the news come out. Currency pair is going to move in one direction, and then once the news is released, then usually it moves back into the opposite direction. Or maybe it might even do a continuation in the direction that it was originally going. But if you got your stops too tight, you're definitely going to get stopped out. You get into your price, and then you get stopped out, and then you just lost money without even a chance to even, make any money, okay? This is right here, and I want you to look at this in particular. So this is on the hour chart, but I want you to notice something here. See it on the daily chart, right? And this is what I want you to notice. And if you haven't already learned, or you haven't already, don't know anything about support and resistance lines, go and read up on support and resistance lines, right? Just like we just talked about, the market, all this stuff that you're seeing here on the screen, all these little candlesticks, all they represent is supply and demand in the marketplace, right? And if you notice here, coming right through where we got our entry and our stop loss at, right? You notice how it seems like the candlesticks in this particular scenario here, they came down, hit that line, came up a little bit more, came back, hit that line, bounced off, and came back up again, right? For a couple of days. And now they're back down, hit this line again. That's no coincidence. That right there is a support line. I'm almost willing to bet you if we go backwards here, we'll see where it's been supported before in the past. If it ever hit back then before in the past. All right, yeah, there we go. Right, had to go back a little bit, right? Back to 2017, but that same exact line right there had support for price back here in the past in 2017, right? And now it's showing that same support for price over here in 2018. And why is that, right? It's a phenomenon, that's in the markets, whereas when the price gets to a certain point, a lot of traders got that point on their radar and they say, well, you know what, this right here is a significant low for us, right? This right here wasn't a significant low. This right here wasn't a significant low. This wasn't one. This wasn't one. This wasn't one. This wasn't one. This was, right? Once it hits here, it's like an aha moment the traders have and say, you know what? Price is really low right now for this currency pair. I think it's a good idea for us to get in at this point, right? And that's what happens. Usually people have it set to alerts. Usually, you see options that are are priced in at this area right here, where people have a lot of options at this area. Whatever it is, people tend to gravitate. The market tends to repeat itself. So it was a support in the past. 9 times out of 10, it's not always the case, because sometimes it will crash through that support zone. But it's one of those areas that you definitely want to observe, you definitely want to look at, because 9 times out of 10 or 8 out of 9, however you want to quantify it, it could serve as a support again in the future, right? Same thing with resistance, right? You get these areas of resistance, whereas, the market comes in, and this is where sellers say, you know what, this price is a little bit too high, and I don't think it should go any higher, and so they begin to sell the market at that price point, right? And another phenomenon is that a lot of times, right, your support, something that was previously support, can turn into resistance as well, right? So whenever you see these type of things, it's always good to kind of look at it. There's no more than from an academic standpoint and just say, wow, let me see this a little bit more. And one of the best ways that you can identify it is always go back and look left of your screen, right? And then that's going to help you identify where these things happened before. And so you kind of see it here. This area here, where this line is going through, it became a resistance, a zone of resistance. And what is a zone of resistance? It's just an area where price has a hard time trying to break through, right? And it may touch it a couple times, go through it a couple times before it finally gets through it to start making newer highs and new higher highs, new higher lows. Typically, it's almost like a little consolidation area, right? Where price tends to consolidate, gains its energy, gets some energy up, and then it's going to make a decision where it's going to go next. And if you look at this example here, back in November 2017, hit the resistance line, hit it, came back down, hit it a couple times, went back down, almost touched back down on the support, but it didn't have to before it made its way back through the resistance, right? And then if you look over here, that same resistance line, that same line that was stopping price, preventing price from going higher back in November 2017, well, you look over here in May 2018, that same line, all of a sudden, what happened? Wow. Every time the price touched on that line, Price went back up. Ooh, price goes to the line, it comes back up. So what happened? All of a sudden, that same line that was resistance before, all of a sudden became a zone of support for price now in May, right? So buyers were coming in to that old resistance line where sellers used to maintain, and they were saying, hey, you know what? The price is up this high. We don't want to see that price go down anymore. We think it's really cheap and it has more room to go. And they were trying to push it back up. But eventually, you know, back in July, you know, price did go through that old resistance, then currently at that time, potential support, right? And then went all the way back down to their original level of support, which is where we are right now, right? That's why I say, you know, these zones of support and resistance, they're good, but there's never any guarantee in this market, man. And, you know, you got to be smart about the trades that you're making. You got to be educated, understand when you see these areas, so that way you can make a good decision, right? And once again, it's kind of where we come into play, and that's the reason why we do what we do, is to kind of help you identify these areas and to try to help you understand what you're seeing, so that way you're an educated trader and you can make good decisions whether or not you want to be buying in this area or selling in this area, okay? So this kind of leads us back to where we are right now, right? Area of support is turned back into an area of resistance again, right? As you can see, price tried to break through, couldn't, came back down, tried to break through again, it couldn't, went back down, tried to break through again, it couldn't, and it went back down, right? And actually kind of gapped down, right? And went back down, and that's where we're at right now, right? So we're at this area right here of support. And the question you got to ask yourself right now, right? Everyone that's here and everyone that's trading should be asking themselves, what do I think price is going to do next? Do I think price is going to go ahead and break through this area of support and continue down? Or do I think the price is going to bounce off of this support and then going up to resistance, right? Based off of how you answer that should dictate what your next move is going to be with this currency pair, right? Now, me personally, I personally think that this currency pair is something that you want to be careful about trading. I wouldn't trade it right now because I don't really see any kind of real market direction in it. I think after Friday morning, you're going to probably get the direction that you need. And the reason why I say that is because Friday morning is when the fundamental information about the Canadian dollar is going to come out. And I think at that time, you're going to know, what direction it's going to be trading in and whether or not you want to be in that currency pair, right? And that's the smart way to trade it. I think you have some people that, well, I want to get into it now. You can't get into it now, but just be prepared that between now and Friday morning at 8:30, it may be a rough ride. Matter of fact, so what's coming out Friday morning at 8:30 is going to be the unemployment rate for the Canadian dollar. It's going to also be the change of employment for the Canadian dollar. So those two things right there are going to make that currency very volatile. And then also around 8:30 Friday morning as well, just kind of keep in mind that we got the non-farm payroll for the U.S. dollar and the unemployment rate for the U.S. So once again, if you're trading in U.S. currency pairs, Canadian currency pairs, be mindful of that, right? Because that's going to impact your currency pairs. Don't get lulled into thinking that, hey, you know what? I think I got something here. It's moving the direction that I want to move, and this is going to be easy because come Friday, or even before Friday, you could get whipsawed out of that thing real quick. So be mindful of that and place your stops and do your buys accordingly, okay? So let's get back in here. Okay. So with this right here, I probably would just say, I probably say stay away from it for a little bit. I just don't think it's worth it, trying to get into it right now. And if you notice right here, when we tried to get into it yesterday, right? Where we at? Okay. All right, boom, 3 o'clock. All right. So when I got into this yesterday, give you a little bit of idea of what I was thinking. I was looking at say, yeah, you definitely like we're at a bottom, right? I knew some good, pretty good, decent economic information that came out about Canada in this past week, in this current week. You know, the whole thing with the NAFTA deal. So it has some, the wind to its back a little bit. I also knew that we had a gap over here, and you may have heard me say this before, but gaps have always got to be filled. It came close to being filled here on the first, but it wasn't 100% filled. But gaps have, got to be filled at some point, and it hasn't been filled yet. So what my thinking or my logic was that, hey, you know what? We look like we're getting some. We're at the support level, hitting off on the bottom of support, right? There's the low here. You can consider this to be high here. You can see that to be a low there. So it looks like we're making a higher high, higher low, right? Enter the 3 a.m. picture, right? We could potentially get in here, potentially make some money. Fortunately, was not the case, right? This thing just continued to move sideways, and never really did anything. This entry is wrong. Let's take profit. Oh no, it's not. I'm sorry. Yeah, so what happened was it hit the entry, which is the black line. Boom. It was making its way towards the target, but then unfortunately, around 5 a.m., they decided that, hey, we're not gonna go towards the target. We're just gonna make a new high, right? And then it came back down and hit our stop loss right there at 6 a.m. So, it was in for a little bit. Looked like we had the potential to make some good money for a little bit. Came back down, stopped us out. Hey, it happens, right? We took another loss, right? Was there a way to save this trade? Nah, not really. I mean, other than just be out of the trade. I mean, if you look at pretty much all these trades, I mean, the only way to really save 90% of these trades would have been to take on more risk and pull your stop loss back to like either the low of the potential trend line, or just a low that's significantly farther back than what we're willing to risk our money on. Because remember, if we're going to risk our money, we want to make a certain amount of profit, or at least think we're going to make a certain amount of profit. And the problem is people are just really kind of over risking their accounts, and for what, Yeah. So that'd have been almost like a 1-to-1, actually probably been a little bit worse, because we don't bring it all the way back directly to the that lower wick. We're gonna do at least 5 or 10 pips below that lower wick. So that would have been a hard one for me to swallow, just in case if it did go down. Like I said, we're right here at the edge of support. Although I believe that it's going to continue up, there's no guarantee. And so a situation like this right here, me personally, I trade scared all the time. And the reason being is because I just like having money, right? I kind of got used to having money, and it kind of bothers me when I lose money or give money away to someone that I don't want to give money away to in particular. And I don't necessarily want to give my money away to the Forex brokers, because I think they have enough of other people's money that they should be happy and they don't need to have mine. So I like to use a lot of caution when I trade. But at any rate, let's get into where we at now, account wise, right? Oops. And if you look right here, so right now we're negative, or we're down dollar wise, $537.21, right? Personally, I don't think that's bad, because we traded 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So think about this for a second, folks. We had 12 trades that we traded so far, right? 12 trades. Out of those 12 trades, we had 1, 2, 3, 4. 2, 3, 4, 5, 6, 8. So out of 12 trades, we only had 4 that was profitable, right? So that means that we had 8 losing trades. 8 losing trades. Lost 8 times, right? Only won 4 times. And we're only down $537.20. So that means that each of our losses average out to be less than $100 a loss. Now, personally, I mean, I think that's great, right? Because that means that, you know, I'm having all these losses, but I'm not, it's not significantly impacting my account. Sorry, I'm just doing a little bit of math. Let's see, about 8. About 8. Yeah. So we're talking about $67 on average is what I lost on each of my losing trades, and that's where we at right now at the $537.21. I think that's good, right? Because all we really need is to get one trade to go profitable, and we're back in the green again, right? And hopefully we'll see that today. Once we get through and get in here and start making these trades, that we'll get that one that we need to be back profitable again, and then, you know, perhaps we end the week out on a high note. Okay. But that kind of goes back to what I was saying before about the money management, making sure that you're taking appropriate lot size for your account value. Because once again, too many people get caught up in the hype. They want to try to prove something to someone. They want to get greedy because they see a setup and they're just like, oh my goodness, this is like the perfect setup. It's textbook setup. It's no way possible. This could not work. And then what happens? It doesn't work. And then what happens? Your account value gets dropped down drastically, and now all of a sudden, you know, you got this huge, massive loss that you're trying to figure out. Well, how do I come back from this? You know, how do I come back from that? And so what happens is you go out and you trade more aggressively because you're trying to make that loss up quicker, and then all you do is you wind up getting another loss, right? Because you're emotionally involved in the trade. Folks, I'm not emotionally attached to any of the stuff, and that's why I can put the stop loss in place, go work out, make a sandwich or whatever, and if it hits, oh well, and if it makes money, that's great, right? And because I can do that, you know, I can take 8 losses, and my losses only average out to be about $67 each, all right? Which is really good, right? 4 wins, 8 losses, and all I'm down is only $537, right? So theoretically, I can have 5 wins and 8 losses and still be profitable, which hopefully we'll see that, like I said, today sometime. So with that being said, you know, it's 3:46 right now. Let's start looking at what we're going to be trading potentially coming up today, okay? And remember, the reason why we're trading this, I don't recommend you trade every day, but the reason why we're doing this right here, because this is part of the whole London daybreak strategy, which theoretically, you know, you could use this strategy pretty much at every opening, right? You probably use it at the U.S. Open, you probably use it during the Asian Open. The reason why it tends to work better, though, for the London Open is just because London is the financial capital of the world, pretty much, right? A lot of money comes through there, trillions of dollars comes through there, and a lot of companies do their transactions as far as they can do mergers and acquisitions. They're getting the funding coming through the London market, and so with that being said, there's a lot of money that gets moved through there on a daily basis. And so if you can kind of determine what direction that money is going to be moving through early in the morning, then you got an idea how it's going to be moving through for the rest of the day. So you can start your, your buy orders or your sell orders accordingly, and you should be able to make some money. Fortunately, for whatever reason, I don't know, just because I've been, I don't know, unfortunately for whatever reason, haven't been able to really show you that in a good sense. I mean, we have had some wins or whatever, but for whatever reason, whether it's something on my part or something, whatever, I just haven't been able to do it as consistency as I would like to be able to show you. But once again, that's how the market is. If you want it to do one thing, it's gonna do something else. And you can't control that. But one thing you can control, like I said before, is your losses. And as you see, we had 8 losses for an average loss of about $67, under $100 a loss. That's not bad. You can keep your account going with that. The problem is when you have losses that's over $100. On average, you lose $500 a trade. You had 8 losses. I mean, what's that, about $4,000 that you had lost by now? That's where people get into trouble. Greed is never good. I don't care what Gordon Gekko says. It'll get you in trouble, every time, just like it got him into trouble every time. Pick this back up. Okay, so let's look at what currency pairs we want to trade. Let's look at some and see if we can see something that we see some potential in. So like I already said, we're going to stay out of the Great Britain pound, Canadian dollar, just because there's some news that's coming out on Friday, and I don't feel like until that news comes out that's going to be a decent pair for us to trade. We got some information coming out about the U.S. dollar on Friday as well. This one right here, I would still probably go ahead and trade this one just because I think that there's some potential here for some continuation. Let me just check and make sure that we're not at the bottom of a support line as well for here as well. Boom, boom, boom. It's close. I mean, that right there could definitely be a support line, right? Boom, boom, bounced off. But let's see here. Blah, blah, blah. And right here, boom, boom, boom. All right, so just going back looking left and seeing where we at. It's definitely an area that we need to be aware of. Definitely an area we need to be aware of because it looks like it's an area of potential support and resistance around that area. Area of support. So we'll come back on that one. Sorry, I'm gonna take some notes here. And write down what I think are some good trades. Boom, boom, boom. Alright, what else we got? Let's see. Oops, I don't do that. Let's see, Great Britain pound, Aussie dollar. Let's see, what are we looking here? Maybe. So this is another one here you got to be careful with, support, resistance, right? Is this thing going to go higher or is it already hit as high? Let's see here, what else we got? Great Britain pound, Japanese yen. This one right here. Let's get some checks in here. It's consolidating. This one, so oh, let's see here. What's the next one? So we're gonna stay out of the CAD. We didn't want that one. Let's see what's $1 zillion. Okay. All right, I gotta tell you folks, I'm gonna put on 4 today, and I'm going short on all 4 of them. And I know you're looking at me like, Lewis, what the hell are you doing? Why would you go short on these right here? And the reason why I'm telling you is because it looks like all these are they're going through some resistance levels, and in my mind, if they're going through the resistance levels, then it's probably gonna be a pullback at some point. But we'll talk about it, right? We'll talk about it. And what we do is when we go into the strategy, when we do the strategy review tomorrow, we'll come back in. We'll talk about why I did what I did, whether I was right, whether I was wrong, right? And if I can, or if I can improve upon what I did, going forward. Okay. Got about 5 more minutes, and then we'll talk a little bit more about which ones we're gonna actually do this with. Let's see here. Go through some housekeeping real quick. Let's see here. Once again, cannot stress enough money management, right? Want to make sure that no matter what, you are going in and want to make sure that no matter what, you're going in and you are managing your losses, making sure that you're not taking on more risk than you need to, right? And making sure that you are able to stay in the game for an extended period of time. That's what it's about, right? Forget about everything else. Forget about the cars, the women, the money, whatever, the men, or whatever it is that you're into. Forget about all that stuff. Focusing on managing the money. Focusing on staying positive with your trades, right? And just don't get caught up in the hype. Take your time, be easy with it. One thing I want to tell you too as well is that there's a lot of free information out there, right? You got a ton of free information out there. Take advantage of it. Yeah, you go to all these different websites. I'm not recommending any of these right here, but I'm just throwing some things out here. Daily FX, FX Street, just a lot of different stuff out there. Forex.com, just a lot of different places where you can go. Well, people offer all these different free Forex courses and stuff. Take all of them, right? Take all of them. Learn as much as you can. Go to our website, forextechmagazine.com, go there. We got a free course that you can learn from there. Just take as much as you can. Go to Udemy. I think they have some free courses there where you can take, educate yourself as much as possible, learn as much as possible. So that way, once again, when you come into these webinars, or you go into like these live streams, like what I'm doing, you can kind of go through and you be able to sort through and determine whether or not somebody's not. You know, somebody's telling you the truth or not. And that's what you want to do. You want to be able to kind of determine for yourself what's happening in these currency pairs. It's good that you have somebody that can teach you, but it's also better that if you know for yourself, so that way you can know whether or not that Forex bot that's, you know, has a 5,000 return, if that's actually a legitimate return, or somebody's actually, you know, padding the numbers there to make it look better than what it is, so that way it can sell you something, right? The other thing I was going to tell you too, that if you're still having problems with this, let's say you go through, you take the courses, you go through, you know, you've been trading on your own, but you're still having problems trying to figure it out, you know. I also offer coaching for folks where I can sit down with you, talk to you, you know, we can Skype, or we can do, you know, some one-on-ones where we sit down and kind of figure out what your trading style actually is and see how we can help you improve it. Everybody can use a coach, right? Everyone. I don't care what type of work you're in or what you do. Everybody can use a coach to kind of help you be better at what you're doing. If you're in the workforce, you have a manager there, and the manager is supposed to be the coach. It's supposed to help you be a better employee, help you better follow company policies better. Michael Jordan, the world's greatest basketball player, you know. LeBron, you know, the second greatest basketball player. I'm not gonna make a lot of you mad about that, but I'm old school, so who cares? All these guys, as great as they are, they got coaches. Tiger Woods, as great as he is, he got coaches. He got a coach. You know, Lindsey Vonn, as good as she is, she got a coach. You know, all these people have coaches to help them be better. You know, yeah, they got natural talent. Yeah, they're really good, but they have someone that they depend on to help them to analyze what they're doing to help make them better. Same thing with a Forex coach. A Forex coach is there to help you analyze what you're doing and to hopefully make you better, right? Because a lot of times, you know, we'll get into a rut and we can't really see what we're doing wrong, but when you have someone to kind of bounce ideas off of and for them to kind of look at your situation, they can give you an honest assessment and tell you that, hey, this is messed up and you need to go back and redo this, or have you ever thought about doing this, adding this onto your trading, and then they kind of hold you accountable for making sure that you go back and make those adjustments, right? And then over time, you should see an improvement. So anyway, just want to kind of throw that out there to you. It is 4 a.m., right? Final 3 a.m. candlestick has formed, right? And so now what we're going to be looking to do is go in and make our positions. We're going to short the market. We're going to be shorting the Great Britain Pound, US dollar. We're going to be shorting the Aussie dollar, Great Britain Pound, Aussie, Great Britain Pound, Japanese yen, and Great Britain Pound, New Zealand dollar. And I know it is crazy because it looks like it's going up, and you probably, Lewis, what the hell are you doing? I really don't know, but I'm gonna do it anyway. Take this loss like a man. If I take a loss, if not, then we'll see. And I may change. I may say I'm going to go ahead and buy it, but I'm thinking right now I'm going to short it. All right, decisions. Anyway, I'm gonna get out of here. It's 4 o'clock. I will tune in tomorrow, right? And that way you can find out exactly what happened and how it worked out. Hopefully it worked out in our favor. If not, well, oh well. We'll live to trade another day. Anyway, God bless all you folks that tuned in. I always like to end it on a high note. And once again, I'll go back to the old but faithful quote from Les Brown, which is always shoot for the moon. That way, in case if you don't make it, at least you'll be amongst the stars. I think it's a beautiful quote, and I think it definitely illuminates what we're trying to do here as far as be better traders. So that way, we want to better shoot for $1 million, but if we don't have $1 million at the end of the trading day, if we have enough to pay our bills and take care of our family, then, it's all worth it. All right, guys, take care, be safe, and see you tomorrow, same time. Bye.